I mean, if you look year to date, right, the winners have been semiconductors, which has really been led by NVIDIA. It's been semiconductor equipment, which I just mentioned before. Yeah. But it's also been construction materials, right, which is interesting.
That is interesting.
Right.
I wouldn't have thought that.
Yeah, and I think what's happening is that people are looking for areas of growth. And one of the areas of growth is, for example, the rebuilding of U.S. manufacturing. A lot of these big factories that are going up. We've had a manufacturing boom in the U.S. We've also had infrastructure programs from the government. And so this has caused construction material stocks to go up because we obviously need construction material. The dollars are starting to flow this year, and that's why they're starting to perform. And so you're seeing kind of concentration in areas of the market that's looking, we need to find growth. And perhaps this is a fact that maybe the economic growth in terms of a slowdown is going to be harder to find. So where are the areas of growth in the market? And tech is obviously there. But, you know, software, for example, is not actually that far up the leadership board. You know, it's probably roughly in line with the S&P as a sector. Wow. And so you've obviously got a few different winners there within those places. And the Mag 7 starting to split up into what, you know, people are now calling the Mag 4, right?
Well, we've had the Fab 4, haven't we? Yeah.
We've had the Fab 4. So, you know, these acronyms keep changing. That is telling you that there's starting to be a bit of difference between the different companies.
We just showed a great board. Sorry, I know Karen's going to come. Well, why don't we show the board while Karen's asking a question? But it was a 12-month view picture of the big tech companies. It was fascinating. Can we do that one again? Look at that.
I wanted to pick up on your comments around US manufacturing because I was pondering this yesterday whether we need to think about that sector differently, short, medium and long term. Short term, if there's a change in the White House, even if there's not, Biden has also shown some interest in US manufacturing. But there is a long-term trend here around reshoring that is also seemingly fueled by AI combined with automation because it should bring down the average cost of manufacturing at some point, right? So that means the US as a hub, short, medium, long term, is a little bit different to what we've seen in the past.
Yeah, I mean, this is the great story going on in terms of American reshoring, right? And we've got an ETF, for example, that's playing on that theme. And I think what's really interesting about that is, one, companies are making those decisions now. The world has become a riskier place, so it's better to have your manufacturing closer to home to avoid some of those risks. The cost advantages of manufacturing abroad are obviously not as big as they were, say, 20 years ago. And automation is a big driver of that, right? Because the factory you're building now is going to be a lot more efficient than the factory you would have built 10 years ago. And this is driving an enormous boom in terms of manufacturing construction. And that's what we're seeing on the ground in the US. It remains to be seen how this is becoming competitive or not, because other countries are obviously going to try to keep up. But we think
it's got to be cheaper down the track, right?
Yeah.
If you put a same manufacturing plant somewhere in, say, an emerging market that you would have in the past, what's the difference in cost base? Well, the plant is obviously going to be slightly cheaper in that EM country. Logistics are possibly going to cost you more getting the product back to a developed market. Yeah. But everything else should be a little bit cheaper because the equipment now, automated equipment with AI in it, should actually be the same in both jurisdictions.
That's where we're headed. So if you actually look at what's called the total cost of ownership of a plant, so the total cost of running it, that's not that uncompetitive in in the United States versus China. But if you look down the track with AI and artificial intelligence and automation, it's going to be a lot more competitive. And we think that's going to be a real big driving force.